And I think the first thing you got to look at is U.S. dollar. It's going to have an impact on EM significantly. Um, you spoke about the outflows and the worry of that in China. I think that's going to continue. I think there's a chance that you'll continue to see the momentum in Indian markets be strong. So I do like that market to a degree, but generally speaking, we are moving away from emerging markets. That's really coming at when we're looking at kind of what's ahead. The economic data is showing a clear sign that the U.S. economy is slowing down, and unfortunately, the major EM markets can't they can't get by without the U.S. economy continuing to boom. So as the U.S. economy rolls over, you'll start to see pressure on emerging markets, and I think there's just a lot of headwinds, especially when we're looking at China. I don't think the real estate market's going to improve. There's really just not a real demographic reason for that to happen. And then policy is going to be kind of hamstrung. They're not going to really be able to stimulate the way that they need to because of what the Fed's doing, or potentially what the Fed's going to be doing. So I think, China is going to have a tough time. As much as I want to like that story, and I do like the story long term, in the near term, we're just taking those chips off the table, kind of moving into a more defensive stance and moving just towards really large cap U.S. stocks. A little bit of a boring trade, but we're just trying to just put defense into portfolios, and right now we just see too many headwinds when we look at EM.
Indeed, indeed. And, the important angle to the story, Adam, is really about China's export potential, something that they're banking on in terms of achieving that overall around 5% growth target. But the pushback that they might get because of trade barriers and trade restrictions that many jurisdictions are imposing. And so how do you see China maintaining that balance at a time when, like Sam said, we're waiting for key economic data to come out of the region?
Yeah, I mean, they're in a tough spot because they were trying to move towards really becoming more of a consumer nation, and they were starting to get momentum, but just haven't been able to pick that back up after just everything with COVID and everything that occurred with that and the shutdowns. So they had to move back towards an export dominating, economy, and now you've got the fact that there's a potential the U.S. economy is going to, or, if you get Trump in there, you're probably going to see even more tariffs. It's going to make it difficult to sell outside of the country. And you're seeing that elsewhere as well. So I think exports are going to be difficult, and then selling internally is going to be difficult. So I just think there's just, like I said, there's too many headwinds for China right now because what they really need is to depreciate their currency, make their goods easier to sell, really get those exports out there, and that can kind of keep the economy going and keep growth at a decent trajectory. But right now there's just too many headwinds for that to happen the way it needs to.